Investors have their attentions now fixed on today's T-bill auction, where a total of 264 billion naira is to be offered across standard maturities. For the bond market, traders at Access Bank expect improved activities given the less hawkish stance of the Monetary Policy Committee. Senator Audu, Treasury team member at Access Bank, joins me in the studios now for a market update. It's a pleasure to have you in the program. So maybe a good place to start would be just to get your perspective on the significance of the MPC decision and how that could translate to the primary and secondary T-bill market.
Thank you. Thanks for having me, Wally. So at the auction, at the MPC meeting yesterday, the MPC adjusted two key parameters. The MPR was adjusted upwards by 25 basis points from 18.5 to 18.75%, and the asymmetric corridor around the MPR was narrowed. So previously it had been plus 1% minus 7%, but now it has been narrowed to plus 100 basis points minus 3 basis points, 300 basis points. So the significance of that is in the acting CBN governor's address. So he did explain that the MPC did not completely want to neglect the expected inflation, which is expected to increase. So they did that to signal to the market that we're with you, just to keep eyes on that. But speaking about the impact on the markets, we expect market participants have largely priced this in. There's an NTB auction today. About 264 billion is on offer across the standard maturities. We had been seeing a decline in the stop rates across the last few auctions. The last auction for the 91-day closed at 2.6%. The 182-day closed at 3.5%, and the 1 year closed at 5.94%. The 364-day declined from 6.23% to 5.94%. At this auction, we expect rates to rise because the market is not very liquid. Market liquidity is currently at about 290 billion, so we expect market participants to price those rates higher at this auction.
So market liquidity is currently not very buoyant, if you like, but there is that sense that a lot of liquidity is going to hit the market. Can you just explain where it will be coming from, just for the benefit of our viewers, and the quantum that you're expecting?
So this week, the key liquidity event is the FAC, the Federal Allocation, the Allocation Committee. So they did about 1.9 trillion, but the federal government is saving the bulk of that, over 700 billion, about 790 billion. What is expected to hit the system is just over 900 billion, which is significant. We expect it to hit this week. But market participants are not pricing the NTB auction in line with that. There's a development that we expect significant debits in the system very soon.
What debits are we talking about? Not CRR, right? Or is that CRR?
Some form of CRR. So the CBN is trying to moderate liquidity levels because inflation again is at 22.79. So the CBN does have to do something on the monetary side on that. So we expect some of those debits to come into the system. So market participants are pricing rates in the secondary market and primary market to be higher.
All right. Well, thank you so much for the update. Clearly, we'll be following those markets very closely. Senator Audu, Treasury team member at Access Bank.